Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was gonna say I am getting up there in age, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back.
So today's topic is how to become an investor in the stock market. Now this one is one of my favorite topics because it is so near and dear to my heart. Everyone will eventually, at one point in time, be an investor. If you work for any corporation, most corporations I would say, or if you dabbled in any brokerages like Robinhood, N1 Finance, E-Trade, whatever it may be, you will eventually dibble and dabble in the world of stocks because your companies are going to enroll you in 401k plans, Roth IRA plans. Some of them will have company matches. If you work for the government, they'll also offer you certain benefits and certain brokerages in which you can earn money and invest money for your retirement. Now, I got started at the early age of 18 years old. But by the time I was 17, I was hearing things on the news like Facebook is about to launch and their share price is going to be $50 a share. And I was so excited because I use Facebook. And I said, if only I was 18 years old and had some money, I would be able to invest in this amazing opportunity. Turns out Facebook was a rock star of a stock. They've even had stock splits till today. For all of you who don't know what stock splits are, is when a company splits the price of their stock, making one share into multiple shares. So for example, if a stock costs $100 and you split it 4 times, it is now worth $25 per share. So if one person owned 1 share of Facebook before the split, they would now own 4 shares to equal the same amount of $100. This makes it a lot easier for a new investor to not feel intimidated by the share price of the stock. Being $25 is much more easy for them to say, you know what, I can invest in this company and buy an entire share of the company at just $25 versus trying to buy a share at $100. Some people might be intimidated by that and not purchase in at all. So stock splits are really for novice investors who really care about whether or not they can purchase an entire stock share versus just simply buying a company that is profitable and doing well. You see, experts investors do not care about a stock split because it makes no difference. We value the company themselves and what they're able to bring and what value they're able to bring. But a stock split works really, really well on novice investors who are still hypnotized by the price itself and not what the company is doing and the value that the company has. And in fact, stock splits might even overvalue the company because now, since the shares are more diluted, people might run it all the way back up to 100 shares. And the company might be valued at 100 billion, is now valued at 400 billion. And so sometimes people look at the share price and not the overall value of the company and where it's priced at. And this is how some companies can be overvalued. And like Warren Buffett always says, he wants to look for a deal. And in order to find a deal, you need to find undervalued companies. Now, I'm not saying any company that does a stock split is immediately overvalued, but I am saying the price itself is not indicative of where the company is. You need to look at what the company is doing, is the company growing, and over time, what the company intends to do, right? And do you agree with what they're doing before you put your money where your mouth is? So that is what I do in order to determine what companies and stocks I want to invest in. You already know that I just posted a video less than 2-3 weeks ago showing you one of my entire portfolios for my stock market account, my personal stock market account. So if you're interested in understanding how to invest, I truly suggest that you look at that video, because I am going to break down 2 or 3 stocks and ETFs in order to let you in on a few trade secrets. Now, the first platform that I ever used was Robinhood. And it was very simple, very easy. Very good for me to really understand the stock market itself, because I got to understand the news outlets covering these stocks. I got to understand dividends, ratios, expense ratios, the 52-year average from the highs, the lows, the volume in which people were visiting the stock. All these things were super important. And then I got to look at their 5-year, 10-year, 1 year, 1 week, 2 month, 1 month. And I started to evaluate these companies and really understand what they're about, how they intend to grow, how people act and interact with the stock market, what makes them FOMO, fear of missing out, and what makes them bail and get bearish in the stock market, what makes them bullish about certain companies in the stock market. Once I started to understand that over the next 6 years, I then became what I would consider an expert. And now 10 years, almost 10 years later, I almost feel as though I do know it all. But of course, there's always much more to learn. And so drip investing came along. I started to understand brokerages implementing drip investing, where you don't have to own an entire stock. You can own a fraction of a stock. And that will be the new era. That will be the new age. Eventually, splitting a stock won't necessarily be necessary, because people will get accustomed to drip investing. People will get accustomed to buying a fraction of a share. And just owning a tenth of something might be an achievement versus an entire share of something. And so the biggest and best thing that you can do as a rookie investor, as a beginner, is simply get started. I downloaded an account. I started to look at companies that I wanted. I put, at the time, 20% of my savings in the stock market, which wasn't much. I had about $10,000, and I put $2,000 in at 18 years old to get started. And from there, the sky was the limit. I started looking at, what can I buy? I was in the grocery store on my phone, figuring out, what can I buy? And when I bought some McDonald's, I thought I could just go in McDonald's and get some free McDonald's. But no, that's not how it works. When I bought that McDonald's stock, I walked in that McDonald's, I purchased that McDonald's, and I said, I am helping myself with each purchase I make at McDonald's, because that is going to increase the volume of people going to that McDonald's stocks, seeing the profit that they've made, and increase my investment within McDonald's as well. And so yes, I was getting that dividend from McDonald's, and that was them paying me for being an investor. And every time I would go to McDonald's was also an indicator that, that company was doing well, in my belief, and it has been doing well moving forward. And although I don't frequent McDonald's as much as I used to, especially after leaving the Army, I still love the company. I am loving it. And so if you guys like this video, like, comment, and subscribe to the channel. I post every single day at 8 a.m. daily on YouTube, Rumble, and now on Spotify for podcasting. And I can't wait to see you in the next one. Peace.